Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 1675 to 19 quarter as support, and the idea was that as long as ES holds above it, the buy side can maintain control, and that ended up being the overnight low here. At this point, heading into the open, our short-term directional bias is relatively neutral. We have to see continued upside momentum and broad market strength in order to continue pressing higher. The first area of support is 21.5 to 23.5, and ideally ES holds above that area if buyers are to remain in control. Also keep an eye on the other markets. The Russell is near a short-term inflection point here, so keep an eye around the 1008 to 1010 in the Russell. If it fails at that point, then it can lead to some selling in the S&P as well. But as far as ES goes, 21.5 to 23.5 is the first area of support. Holding above it would tell us that there's still potential for buyers to step in and continue pushing the S&P higher. Below that, 1675 to 1875 is a reference area that will be used as the micro bull bear zone to establish bias. A breakdown below 1675 could shift the short-term control to sell side, and from there we can get a move down into 09 quarter to 1075 quite easily, and even down to 0275 to 0475, potentially even a little bit lower, but 0275 to 0475 is a good area to expect responsive buyers to be active. You have yesterday's low of day within that zone, so on first test we can still get the buy side active, and keep in mind that our short-term directional bias is neutral to bullish. So within that context, we can anticipate responsive buyers to be active on first test of the important areas of support. So 0275 to 0475, 1899 to 1900 half, and in the event of a break lower, the 99 half to 92, 83 quarter, 85.75. All those areas are spots where responsive buyers can be active on first test. Now, ideally, even if we head lower, you want to see ES holding above 1899 to 1900 half and not really push too far below that. That would still allow the market to balance at least above 1900, and we could simply consolidate the recent gains. So in order to break down below yesterday's low, we would have to see a lot of weakness across the board and sustained downside momentum. And if the market's exhausted into that area, most likely you can anticipate a bounce. Now on the upside, we have pre-market resistance 31 to 33 half. That area has already been tested here in the overnight session, so we'll need to be careful over there. But we are going to have to see some decent momentum in order to get a sustained breakout. On the upside, 38 to 40 is the bigger balance that the market has been really just ranging in. That's the upper edge of the bigger balance area. So 38 to 40, 43 quarter to 45.75. Those are resistance zones where responsive sellers can be active on first test. And in order to get a sustained breakout above 38 to 40, we will have to see broad market strength, sustained upside momentum, and participation from the other markets. Otherwise, ES can attempt a breakout above 38 to 40 or even above 43 quarter to 45.75, but it becomes a high risk breakout attempt, which is more likely to fail. So if we're not getting participation from the other markets and we're not getting really a lot of underlying strength visible on the advanced decline, we're not getting upside momentum, then it doesn't mean the ES can't attempt a breakout above 38 to 40, but it would be a higher risk breakout attempt and more prone to failure. So at that point, we can start to look on the short side, and then the market can balance and consolidate from that point on. So given where ES is trading, given the resistance zones above, we do have to be more selective, and we do have to see those signs in real time. And if there is a lack of strength on the upside, so let's say ES attempts to break out even above pre-market resistance or initial resistance, simply a lack of strength can be enough of a reason for the market to reject those areas and just continue consolidating and balancing. It's not like we have to see weakness up there. Simply a lack of strength can be enough of a reason for the sell side to step in. Also keep in mind that ES has gone from the recent lows all the way back up to these significant highs in a very short period of time. So we are short-term exhausted up here anyway and overbought as we approach these upper areas of resistance. So we need to be a bit more careful because the risk reward doesn't really favor the buyers above 38 to 40 and 43.25 to 45.75. Those are risky spots for new buyers who may be initiating longs at those areas, and even the slightest sign of weakness or a lack of strength can be enough for those guys to bail, and that can result in a failed breakout attempt up there. So that's something we'll have to see in real time, but that's the market context right now, and something to be aware of and mindful of if the market does approach 38.40, 43.25, 45.75. So heading into the open, we have to be quite nimble and flexible with our bias, and understand that even though the directional trend has been to the upside over the last several days, it is getting a bit exhausted and overbought up here. So we'll need to be a little bit more selective and a little bit more cautious. Keep an eye on the Russell. I think that's going to provide a nice heads up one way or the other. If it's holding the 1008 to 1010 area, then we know that there's still potential for buyers to step in. And if it fails there, and especially if it starts breaking below the 1006 to 1007, then that can lead to a pullback in the S&P as well. So we need to be open to a move in either direction here, and not really be overly bullish in this environment simply because it is a bit exhausted and overbought up here. So those are the main ideas heading into the open. Let's see how the other markets hold up. Let's see how ES reacts at 21.5 to 23.5. That'll help set the tone and bias for the morning, and we'll take it from there.